Hello and welcome back. I'm Rachel. You're watching Kalkine TV live from Sydney. This is the Sectoral Pulse Show by Kalkine TV, a special show covering all sectoral movements from the markets for the day. Let's have a look how the Australian share market is moving today. Australian shares inched higher on Monday, helped by a rise in energy stocks, while investors looked at US inflation data due later this week that could determine the Federal Reserve's monetary policy stance. The S&P/ASX 200 index moved between positive and negative territories before trading 0.4% higher at 7,058.9 so far today. Moving to the sectoral movements on the ASX today, the energy index rose 0.5%. That was boosted by higher crude prices. Whitehaven Coal and fuel refiner Ampol were the top gainers on the sub-index. Eyeing core inflation data in the US, investors were worried that a high reading could revive talks of an early tapering in the Fed's bond buying program. Among other stocks and sectors, the IT index rose 0.2%. That was led by Codan and Nuix. Meanwhile, the metals and mining index fell 0.1%. That was on slumping iron ore prices after top steel producer China stepped up efforts to cool a blistering demand-driven rally in raw material prices. The mining trio BHP, Rio Tinto and Fortescue Metals fell between 0.1% and 0.9%. Financial stocks dipped 0.1%, led lower by AMP, down 3.6%. The Macquarie Group also lost 2.3% so far. However, buy now pay later firm Zipco was the biggest gainer on the benchmark after announcing expansion to Europe and the Middle East by acquiring two companies for around $123.76 million. From the global markets, Asian shares got off to a cautious start on Monday as investors awaited key US inflation readings for guidance on monetary policy, while Bitcoin tried to steady itself after being hammered on news of China's crackdown on the mining and trading of the cryptocurrency. Global market performance. MSCI's broadest index of Asia-Pacific shares outside of Japan dipped 0.4% in slow trade. Japan's Nikkei added 0.2% and Chinese blue chips lost 0.5%. The Nasdaq futures were flat and the S&P 500 futures firmed 0.2%. Euro Stoxx 50 futures and the FTSE futures added 0.1%. In New Zealand, the benchmark S&P NZX 50 index fell 0.4% to 12,415.7. The Synlait Milk Company was the biggest loser on the index so far today after the dairy producer forecast annual loss due to COVID-19 disruption to its key Daigou supply channel to China. After surveys of the global service sectors out on Friday showed spectacular growth, all eyes will be on US personal consumption and inflation figures this week. A high reading for the core inflation figures would ring alarms and could revive talk of an early tapering by the US Federal Reserve. The Diary has a crowd of Fed speakers this week, including the influential Fed Board Governor, Lael Brainard, and markets will be keen to hear if they stick to the script on being patient with policy. The Bank of America's monthly fund manager survey found a record high 69% of respondents expected above-trend economic growth and inflation globally. As a result, managers had pushed into commodities and late cyclicals, where overweight positions were close to 15-year highs, while the single most crowded trade was Bitcoin. The crowded trade in Bitcoin left it vulnerable to a sell-off. That was as investors rushed to the exit, seeing it down 50% from its all-time high. The cryptocurrency shed 13% on Sunday alone, but was trading up 1.5% at 35,208. It was hurt in part by China's crackdown on mining and trading of the largest crypto as part of ongoing efforts to prevent speculation and financial risks. The softness of the dollar, combined with concerns about inflation and the wild volatility of cryptocurrencies, put gold back into favour. The yellow metal was last at $1,884 an ounce. That was after reaching its highest since January. Meanwhile, oil prices edged higher as a storm formed in the Gulf of Mexico. Also, Iran had said a 3-month nuclear monitoring deal had expired, raising doubts around the future of indirect talks that could end US sanctions on Iranian crude exports. Brent was up 63 cents to $67.06 a barrel, while US crude added 61 cents to $64.19 a barrel. Now it's time for a very short break. Please stay tuned. I'll be back very shortly with the latest from currency and the crypto markets.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Welcome back. I'm Rachel. You're watching the Sectoral Pulse Show. And now moving on to currency updates. The dollar stood near its lowest level in 3 months against a resurgent euro, and traders paired earlier bets the Federal Reserve may soon taper its stimulus through markets were not fully convinced that higher US inflation is transient. The dollar index, measuring the greenback against a basket of 6 currencies, was hovering at 90.045 cents, a tad above a 3-month low of 89.646 on Friday. Minutes from the Fed's April policy meeting released last week showed a sizable minority of policymakers wanted to discuss tapering bond purchase on worries that pouring more money to an economy on the mend could stoke inflation. Still, Fed Chairman Jerome Powell's repeated comments that it is not yet time to discuss a reduction in quantitative monetary easing has led many investors to believe it will be months before the central bank actually tweaks the policy. The White House says on Friday it had pared down its infrastructure bill to $1.7 trillion from $2.25 trillion, with cuts to investments in broadband and roads and bridges. But Republicans dismissed the changes as insufficient for a deal. With investors preoccupied with threats of accelerating inflation, US personal consumption expenditures data, which is due on Friday, is seen as one of the biggest tests for markets this week. The euro traded at $1.2179, flat so far on Monday, and off a 3-month high of $1.2245 it touched on Wednesday. Some analysts say the currency was capped by comments from the European Central Bank President Christine Lagarde on Friday that it's still too early for the bank to discuss winding down its €1.85 trillion emergency bond purchase scheme. Still, the euro and other European currencies have been bolstered by rising optimism about economic reopenings in the region from coronavirus lockdowns. A preliminary purchase managers index covering the 19-country Eurozone's dominant service industry published on Friday bounced to 55.1 from April's 50.5. That's well above expectations and its highest since June 2018. Data from US Commodity Futures Trading Commission released late on Friday showed spectators slightly increased their net short dollar positions in the latest week while raising long positions, both to their highest levels since mid-March. The British pound stood at $1.4144 off Friday's 3-month peak of 1.4233. The yen was little moved at 108.92 per dollar, trapped between a high of 109.785 after a strong US inflation data and a low of 108.34 in the wake of soft US payrolls data, both touched earlier this month. Let's move on now to the volatile cryptocurrency market. Bitcoin dropped over 7% during the weekend to last trade at 34,157, having fallen to 31,107 at one point on Sunday. Ether fell to a 2-month low of 1,730 on Sunday. That's down 60% from a record peak it hit just 12 days ago and last traded at 12,052. Cryptocurrencies have tumbled after Elon Musk's Tesla said it will stop accepting Bitcoin and after China tightened a clampdown on them. Next is news that matters. The Minister for Health, Greg Hunt, said that Australia expects to receive 2 million doses a week of Pfizer's COVID-19 vaccine from October. Australia has ordered 40 million doses of Pfizer's COVID-19 vaccine, which Canberra intends to use to inoculate its population under the age of 50. While Australia has previously confirmed it would receive half of its Pfizer order in the fourth quarter of 2021, the timetable for delivery for the bulk of the first 20 million doses was not previously known. Hunt said that supplies from Pfizer will accelerate next month and leave Australia with a consistent supply of 2 million doses each week from October, and there will be an available pool of 2 million doses a week for 13 weeks in the final quarter of 2021. Australia has reported relatively low levels of COVID-19 cases at just under 30,000 and 910 deaths. Though the national immunisation drive missed its initial dosage targets, officials have ramped up the vaccination programme, administering 1 million doses in the last 17 days. So far, around 3.5 million total vaccine shots have been administered, far short of the 4 million pledged by March end. Meanwhile, a second repatriation flight carrying 165 people from India arrived in Australia on Sunday. Canberra last weekend lifted a controversial ban on Australians returning from India. Stay tuned today for more live updates from Kalkine TV. We'll be back with more news on the markets, the economy, diverse themes and sectors. I'm Rachel, signing off for now.